The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome here to the Diagnostic Trading Hour, and I am your host, Darrell Martin. Give me a call if you have any questions right here at 877-927-6648. If you're outside the U.S., you can call me at 727-445-1044. And going ahead and doing the market recap like we do each and every day just to let you know where things are sitting at. Right now we have the S&P, and it is down about 4.5 points. And looking over at the Russell, it's down 2.9. The NASDAQ is down 20 points on the day, and the Dow is down 51. And rolling on over and checking out our currency pairs, we got the euro dollar up 9. We have the pound dollar up 51, and we have the Aussie dollar up 13, with the U.S. yen up 27. So the dollar showing some weakness, even though the bond market seemed to be having a little bit of strength in them there. And looking on over at the U.S. Canadian, it is up just 2 pips. And the euro, let's see here, we have the euro dollar there, so looking at the futures market. And so that's our quick summary there on the currency pairs. And if we check out our metals, we can see that copper is up just basically 0.25%. Silver is up quite a bit on the day. It's up 0.514, which is over 1.5%. And then looking at our gold contract, we can see that gold has, moved a little bit. It's not just been absolutely extraordinary, but definitely been some move on gold. And let's see here, I'll pull that up for you right now. We got gold sitting right now at, let's see, one of my charts here. Got to load that one back up. There we go. It is sitting up 11 points on the day right now. So a decent move, not as big as silver. And over the previous day's close there. And looking over at our ags, I can go ahead and pull up corn and soybeans. So we'll check those out. Both markets you can trade, of course, over on Nadex. And corn is up over 1.5%, up 11.50 on the day right now. And soybeans is sitting up right now 13.5, almost 1%. On oil, we got oil. It had a pretty big spike up, then pulled on back down. Right now it is up 63 cents on the day. And looking over at our natural gas contract, it is up right now about 0.041, which actually equals over a 1% move in natural gas. So it has been moving like crazy. And, welcome back to the markets, right? So indices are back open and up and running. And I did a little gap fill trade today. Basically based it on the close from Friday, because that's when obviously the cash markets were open and the stocks were open. So based that gap fill on that day. And really, what happens, all these stocks hadn't traded. You got all this pin-up, stock trading needing to go on. You got mutual funds needing to rebalance their books, balance the books by the end of today. And so they need all that trading done, and they got to put them in there. A lot of them are closing up their years, and that was a big concern on the market overall. And so, we just had that gap fill, and we had basically all the indices went ahead and filled their gap. There really wasn't one on NASDAQ or the Russell based on the closing prices, but there definitely was one on the Dow and S&P, so I hopped in on those. Looks like we have a caller coming in right now, and we got Garo from Alaska. Is that right?
Yes, sir.
Hey, how are you doing today?
How are you, sir?
I'm doing great.
All right. Calling regarding OIS.
Okay.
How far do you think it's going to go down, or if it's going to go down?
Well, let's see here. Well, I definitely say it's in a bearish pattern right now. Let me pull it up on the screen there for you. And then as far as how far, if we go ahead and do an extension from, let me see here. Let me zoom on in for you. And we'll throw a fib expansion on there, and we'll pull it up and then look at basically this is really your biggest AB right there, CD point there, and where it pushed on down, and we pull it on back up, and then we'll be able to see a little bit better. Okay, so looking at the levels right here, I mean, you can easily see not only with the support that you have. If it does continue going, because it is at a major support line. This was a support line way back in July 23rd. Yes. And then it served as a resistance point before that, as you can see. So once it breaks that, then we can easily move down to about $65. Maybe 65.50 right there. You see that area right there also lines right up with a fib level at the $65 mark. So that would be my target. I'd be looking at this point. I'd already be in short on the market. Let me pull up, show you sort of where I would have got in at. And there we go. All right, so I would have got in on the market right here. We'll put this back at auto scope. Right up here at this level. So basically when we had that last apex, and then you could have got in again right here at 76. It's already moved down from there. And then I would have had another entry right here at 76.34. So basically the same price level. The number moved back down. And then the most recent entry would have been, I mean, just above where we're at right now, 71.65. So what I'd really be looking for on a move down is for it to move down. It ought to make a pull back, okay? And when it does, basically meaning a higher low on the close of the day. When it does that, I'd be looking to go short when it breaks that low. And I'd also be making sure that there is some volume when that happens. So if there's some volume when that breaks that, the low of the previous day, then that's when I'd be looking for that move on down, to this last level that we were looking at over here. And, easily down to 69 and then on down to 67. And, probably the lowest I'd expect right now is a move down to 65. So about $5 to $6. Are you short right now on it, or are you you have options on? Or?
Sir. Yes, sir. About 6-7 days, I shorted at 200-day moving average, exponential, nice. Which was $76. You're absolutely right. And still I'm in short, and I don't know if it's got a bounce from here. Should I get out, or should I hold to that until 67?
Okay, so we'll see. You got in, where'd you get in at over here, like 75 or so?
76.
76, nice. Good entry. Okay,
yeah.
So yeah, it's pretty much lining up with these two entries right here. So if you're short at 76, I mean, you've made some good money already. I'd probably take some of the profits off just in case it does pull back. The market as a whole, as you can know, is like right at a support level. And if the S&P 500 index SPX breaks below 1397, I'm going to be looking for the market to really start moving down. If it moves down, it's going to take almost everything with it. Okay? And so, right now, I mean, I would not be shy about taking some profits off the table, but I definitely want to leave some on, and I'd have a stop right here at 74, basically a little bit above $74 here. So I'll tighten in a little bit more, tell you exactly where I'd have my stop. So right now, the high there, $73.90. Yeah, so literally $74 would be where I'd be putting my stop loss on my remaining, or stop, trailing stop profit on my remaining position.
Very good, very good, very good. I appreciate. Thank you very much for your time, sir. Thank you.
Oh, yeah, thanks for calling in. Call in anytime.
Sure, sir. Bye-bye.
Bye. Awesome. So, yeah, some good moves right there over there on the oil states play. So, great job on that setup, going in and going short on that, Garo. And, again, if anybody has any questions, always feel free to give me a call. Stocks, futures, Forex, any of the markets out there, NADEX. And you can give me a call at 877-927-6648. Now, when I played the gap fill trades this morning, gap fills can be a little bit nerve-wracking because, you just don't know what's going to happen. I mean, they were literally just jumping up and down. Markets were moving up and down 5 points in the first 15 or 20 minutes of trading. And if you're using the futures or you're using the ETFs, like when you're doing them, so the spiders or the Qs or IWM, or, you're over on the diamonds, or if you're trading the S&P 500 futures, NASDAQ 100, Russell 2000, or, YM the Dow, like I said, it can be nerve-wracking. So what I did was, instead of worrying about my nerves and worrying about my stops and worrying about getting kicked out, is I traded it with NADEX. And if you don't have a NADEX account, you can get one. Just hop on over here to TFNN.com, and you'll see the NADEX banner right there. Click on NADEX, and then you can click on Create Account. You can sign up for an account live to funded in about 5 minutes or less. And you can start funded with as little as $100. The trades that I put on this morning literally had about a $20 risk per contract. So I had also had a $20 margin. Whatever your risk is, your margin's the same. And you can also get a demo account under our products, and you can click on demo account right there and get set up for that. And the reason I like trading on NADEX is every product on the NADEX exchange has completely defined risk. So you can have a stop loss without having a stop trade, meaning the market can move against you, but you still are in the trade. Sort of like a call or put option, but a lot simpler than call or put options, and in my opinion, a lot better than call or put options. The main reason is because you're not dealing with 1,000 Greeks, or 5 Greeks, whatever, and you're dealing with very short time frames. That's why the Greeks have very, very little impacts. I don't even really analyze Greeks when I'm looking at trading on these, and you don't need to. because you're moving at a delta of 1 to 1 once it pretty much gets like right at where the stock price is at, wherever you know, or not the stock, but the futures at, wherever you sold the spread and or the binaries. So you can hop in on there, you can trade those, and again, have completely defined risk. So if you're going in, you're doing a gap trade, and you're in on this market, and you go short right here, well, I mean, you're going to be really nervous. It could easily have went up. I mean, the market moved up almost a little over 20 points on the Dow alone. And so, that's a decent sized risk you could be taking. So, with every tick equaling $25 over there or whatever, I mean, you go 25 times 20. So, I mean, that's a big risk. So, not everybody wants to take a $500 risk. And that's if you could have easily got stopped out if you only had 20 tick risk on there. And depending upon exactly when you got in and exactly where you set your stop, you could have got stopped out of a great winning trade. So, you can put on the trade with less money, with less risk, and you can't get stopped out as long as it moves back in the direction before expiration. Then you actually have the ability to be potentially profitable on the trade. And I go through a lot of this inside of our diagnostic trading area. If you haven't checked that out, you definitely want to check it out. You can get a 2-week free trial, risking nothing. Okay, 2-week free trial. Hop on over there and just click on try out the diagnostic box spread analyzer and sign up again. 2-week trial, and there's no cost there. And there's tutorials built in on how to trade Nadex. I also go through the box spread scanner. One of the challenges when you're trading on Nadex is that there are so many different trading opportunities. And it's once you figure out, okay, I want to go short, I want to go long, like this morning, I'm like, okay, gap trade. We don't have a lot of time. You don't know if it's going to be a gap. You have a pretty good idea usually before the market opens. But until it actually opens and prints that first opening price, you don't know that it's a gap. And so you can go in there and place your trades, again, without worrying about stops. But when you go in to do that, let's say you're going over on the indices bull spreads. Okay, so, and by the way, don't let the word bull mess you up, all right? They're bullish if you buy them, they're bearish if you sell them. I call them bull-bear box spreads because they look like a box when you put them on the chart. And you go over to the S&P 500, and then all of a sudden you see you got, 3 right here, you got 3 more, so that's 6, 9, 12, 13 spreads to choose from. So which one do you choose when you're ready to sell? And if you waited to go through and analyze all of these to find the best one with risk-reward analysis and, how far it has to move to break even, all that stuff, your trade can easily be over before you even get a chance to make the trade. And so what I did was I went in and had a fixed data feed built into our server directly from the Nadex exchange. And then what it does is it does all the math for you. So you can go here and you can click on Box Spread Analyzer, and that loads up for you. It'll actually pull in all the data, and then it'll update every single second, and allows you to actually see the markets and what's going on with them. And so if I go over here and choose, say, US 500, and go in there and choose 2 and then 100, then it'll show me here are the spreads I could sell, and here's the risk on the trade. Here's how far it has to move to break even. And, here's my reward potential. So I can see this trader right here gives me, for every dollar at risk, gives me a $7 profit potential. And it makes it really easy. And then I literally just click on the button right there, and it'll open the Nadex platform for me and open the ticket in there for me right away. So it's a very cool feature. Stay right there. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome back here to the Diagnostic Trading Hour. And we have another Halloween giveaway with a great Panther Silver Halloween giveaway. Congratulations to Stephen in Florida. So you have been given a free ounce of Great Panther Silver. And if you want to register to win right now, go ahead and do that. But Stephen, go ahead and give us a call. We also just sent you an email to let you know that you won. And you can call us, of course, right on the number right there on the homepage, 877-927-6648. Again, congratulations to Stephen in Florida. And all you have to do to register, there's no gimmicks, nothing you have to do at all except for going in and just register to win. So just click right there on Halloween Giveaway, and then click on the picture and fill in the information. And again, today we're giving away one every hour from 9 a.m. to 6 p.m. Eastern Time. And so go ahead and get your name in there, and it's not too late. We still got several hours left where you could be a winner of a free ounce of silver. And so it's a pretty cool thing that we're doing here. And getting on back over to the markets, we're talking about the box spread scanner, how it helps you find the best spread in seconds versus spending 15, 20, 30 minutes trying to analyze every spread. And because by the time you've chosen, you've done all your analysis, you spent all that time figuring out which one you want to trade, you don't have time to go and figure out now what instrument do you want to trade. You want to hit the buy or sell button quick. And this is what that does for you. And it saves you a lot of time, which, of course, in turn, ideally turns into more money for you, because you don't miss out on maybe the move already moves like 3-4 points by the time you figure it out. You've given up a ton of money. Or, the move's already over and you missed out on the trade. Or maybe you pick the wrong spread and end up taking on more risk than you need to. Or you pick the wrong spread and you give up a ton of profit potential that's there. So that's why I built the spread analyzer for my own trading, and we've made it available over here for you as well. And then one of the other great things you get access to, of course, is our deviation levels. And what this is, I call them diagnostic deviation levels. And we go in and I take the implied volatility out of 4 options, and 4 options per month for 4 months. I take all that information, I put it together, and make basically a volatility type index. And I take that implied volatility after I've extracted it and reverse engineered it out, and then I put it into our deviation formula, which is unique for shorter term trading. So, 1 day, up to 5 days in trading. And it goes in and it basically says, hey, here are the deviation levels. What this means is how far does the market expect the market to move? Okay? So this isn't some pivot formula based on yesterday's numbers. And it's not simply support and resistance numbers. It's not based on standard deviation, which looks like historical volatility. It's how far does the market expect going forward for the market to move, and that's built into the options market, so the demand, such as you'll see premium get a lot bigger on a stock. Like so before Apple's earnings comes out, their implied volatility gets much larger, and then of course after the move happens, the implied volatility gets smaller because now there's a smaller expected move. And so the options actually are very helpful for letting you know how far you expect the market to move, and once you know that, how will you use this? Well, one is, whenever you're looking at a trade, if you're looking at whether you're looking at spreads or binaries or futures or forex, you need to have an expectation of where to start taking some profits, where to tighten your stops. Yeah, you can use Fibonacci levels, which are awesome. What's really great is when they line up, you use like an ABCD pattern, or you go in and use Fib levels, things like that, and you tie them in and you have consensus where they come together and the deviation level and the Fib line line up. That's really what you want overall. But the deviation levels by themselves are great. They're simple. There's nothing complicated. They're objective. You look at it, the number staring you in the face and saying, hey, this is how far the market expects the market to move. And so what I'll go ahead and do is what I like to do a lot of times on the show is go through the deviation levels, just show you how they work and where they're at right now. And we can also, of course, check out and see if there's any possible setups that we can take advantage of. So I'm going to pull those off the screen, and then I'll load up another chart over here. And we will check it out and go through each one of the markets and sort of see where they went to and how far were, basically how accurate were the market's expectations. Okay. Well, looking over at the S&P right now, of course, that's going to be a gap fill play. The indices are going to be a little bit off, but we'll go ahead and look at them anyway. There's an expectation that it would move up to as high as 1419.75. So in the overnight session there, you see it actually did move on up to about 18.25. So you're about a 1.5 off. So which is pretty amazing considering all the movement that happened last night with the drawdown and the move all the way back up. And if we go on over, and also I like to look at, if I'm looking at intraday charts, I like to check out the 10-minute ones. So we'll go in and check out the 10-minute bars while we're doing all this. There we go. And we'll go ahead and pull up the other indices. Like I said, they'll be a little off since the indices were closed down. On the Russell, there was a big move overnight on the Russell. What was the expectation on that? It moved on down to 799. And there was an expectation that the market would move down to 801.8. And then it'd start to pull back. So right shortly after that. And you can see that definitely would have been the area to take your profits as the market's moving down. That's a 1 deviation move. And then it pulled on back up to basically fill the gap, I guess you could say, but overnight. So it's not necessarily a gap fill trade. But as far as your reversal, you'd expect it to go back up 1 deviation. Stay right there. We'll be right back. We'll go through some of the other markets, check out the currencies and the other markets that have been open, and see how they work out on the market's expectations of movement.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. And we're going to go ahead and check out the other market, see where everything is sitting at right now. Well, looking over at the NASDAQ on the deviation levels, we can see it moved up in the overnight session to about 26. Let's see here. We'll get right in on that. 26.75, or the high there, 26.76.75. And we did have an expectation up to about 26.72 on that. Again, that's overnight. We're really looking for that day session. But then it pulled all the way back down and is still moving down. And so it'll be interesting to see how far it goes. Our first profit target was 26.39 on the way down. We hit that, and we're sort of sitting at that level right now. If it does continue to move, we expect a further move on down to basically 26.32 and a half. So just a little bit more move on down, and but we, got literally just a tick off of that. We may even be right at that on the low already for the day here. But the 26.32.5. So right on the money was our next target goal on the downside, and we're sitting at that right now. And then looking on over, let's see what else we got. Like I said, sitting right at the deviation level to the tick. And move down, if it continues to go, it'll be down to 26.22.5. So that's our next deviation level. And, of course, you get these access to these levels with the spread scanner there. And going on over and looking at, let's check out the Dow, see how the Dow's doing. Moved on up and went ahead and filled in its gap. We had a move on up right here to a high of 13,123, and we were expecting a little bit of move up. 13,132 would have been really a full half deviation up, but we were expecting a gap fill on the open. It's not a surprise that it didn't go all the way up there. But we've already moved down. We'll see to a low on this side right now for the low of 12,987. And so we're expecting to move down to 12,992 for our first target. So we just hit that. And I'm still moving a little bit, so we'll see where it ends up over here. But we definitely did have that 12,992. And if it does continue to move down, we're looking for a move down to 12,964. And what's helpful on these half deviations is this where you're looking to tighten your stops. And then at 0.7, tighten them again. And then at 1, you're looking definitely to take off some profit if you haven't already taken some off. And then we'll go ahead and look at our metals here. So we had copper. It moved up pretty high up here. We see a high on the day of 3.5595. And we had an expectation for 3.561. So literally just within, basically a tick or two of hitting right on the money there of the 1 deviation move. As soon as it hit that, it pulled right back down. So a perfect short play set up right there when it hits that 1 deviation move. And I love to do reversals off of deviations. Now, I won't usually do them with the outright futures because, hey, it may go to 1.5 or 2. Rarely, but it may do that. And I have time to be right with the Nadex spreads and Nadex binaries. Going on over and checking out silver. And pointing on that chart, silver has been pretty strong most of the day. And, of course, don't forget to register to get a free ounce of silver there on TFNN.com. And looking at the high, 32 for your chance to win, 32.435. And, again, that's 32.435. We had an expectation of the 32.37. And, of course, it did hit that right here. Once it hit it, a little bit past it, and then started pulling on back down. So that would have been a great take profit goal if you've been long at all at night or even in the morning. If you're long, it's that 1 deviation level, and you tighten your stop up, it pulls back down, and you got to keep a majority of your profits there before closed on the silver market. Looking on over at gold and its big run up this morning and then pulled back down. How high did it go? It went on up to a high of 1726.6. How far did we expect it to go? We expected 1726.7. So literally 1 tick. 1 tick off right there. So it moves up there. You're looking, anytime within a few ticks, you're looking to tighten your stops up, and would have a great place to tighten your stop on gold, and even to possibly go short because it's at that 1 deviation level. It turns around and pulls on back. And so that's your gold contract right there. Let's go ahead and check out a couple of our energy markets. There we got natural gas, which did have a pretty good run up this morning. It ran as high as 3.778, and we had a natural gas expectation on up to 3.778. So to the tick. And literally, it's right on the money there. And so, again, that's 3.778. I'm even pulling it up. And just to show that, just so you can see that I'm not making this up, all right? These are posted every night before 10 o'clock. And here's natural gas. And there we got 3.778, 1 deviation, which is how far we expect the market to move on a consistent basis. So that would have been the perfect take profit point, and also a great reversal. And when it reversed back down, it reversed on back down to the close yesterday, basically moving back a full deviation. And then it moved on back up. Well, what about the bounce back up? So if you decide to play 1 deviation down and then I move back up, well, on the way back up, it went up to 3.746. And on gold over here, 3.75, or actually 3.735. So right here would have been a half deviation move. And so that could have been your target profit for a bounce off of that full deviation retracement that it did. And looking over oil, and again, this is one of the biggest areas that people miss in their trading. They have technical analysis, maybe fundamental analysis, maybe some seasonal analysis, but rarely do traders have statistical analysis. How far does the market expect the market to move? And again, not past expectation, but future expectation based on the implied volatility in the markets. And that's what this is built upon. Looking over here at oil, what do we got? And every once in a while we catch these right in this hour where we can find some trade setups. But right now most of them have already hit their levels and moved on back. But I'm checking over here on oil. It looks like it went up to a high of 87.19. And if we go over here, the move on oil was to 86.92 and then on up to 87.43. Didn't hit the 87.43. Definitely hit the lower level there, 86.92. So when it hit that 86.92 right here, then you'd be tightening your stop. You'd be tightening it again at the close of the next bar. Oil moved on back down, and you got a great trade in there. We're able to capture a lot of the profit without giving it back. So it's not, you get to limit your risk with Nadex, but you want to be able to keep your profit too. And even if you're not trading Nadex, if you're just trading futures, just trading Forex, then this is obviously a big help. Hopping on over, we'll check out our ag markets and see how they did. Corn obviously moved, you can see that nicely spike up this morning, and it moved on to a high of 757.75. And on corn, the expectation was a move up to 751. A 1.5 deviation move would have been 756.5. So you could have tightened on this bar. You would have tightened again on this bar. You'd have been happy you did, because you basically captured a majority of all the profit on corn for the day and got that full deviation move in, and maybe even a little bit more than a full deviation before it pulled on back and closed out. Now checking out our soybean contract and zooming in on that. Soybeans, as you can see, just rocketed up this morning. And how high did it go? Well, it went on up to 1558.75. We had an expectation for a move up to 1554.5, where we would have tightened our stops, and then we had to move the next level past that would have been up to 1560, and didn't quite hit the 1560. It was literally 1.25 points away from it, so 5 ticks, and but it got right up there. You definitely would have tightened on the 0.7. It pulls on back down, and you're able to get out and grab the majority of that, or go short, and you'd be happy either way. And looking on over at the Aussie dollar, check that out and see how that one's working out. We got the Aussie dollar right now. It went up, and of course, overnight a lot with the Aussie dollar when you're trading it. But it went to a high of 1.0398, and we had an expectation first at 1.0396, then on up to 1.0411. Did not hit the full deviation. It did hit the 0.7, so you tightened your stops, and it broke that level after tightening it, and you had a great short trade all the way back down. And we'll go ahead and check out the euro dollar and a couple more currency pairs here, and then we'll go into our fundamental analysis for the week and see what's coming out. We do have some big news items coming out for this week. We've got a high of 1.302, and we had an expectation of first 1.2992, and then on up to 1.3007, and did not hit the 1.3. Actually, did not hit the 1.3007, but you did hit that first half deviation mark. You tightened your stop, and it literally fell down that perfect half deviation move. So you had a long right there, and took the profits, and then you had a potential short right off the deviation. Looking on over at the next pairs, we got pound and the pound dollar, and which is actually showing some strength this morning. I thought a couple of those pairs were going to be falling back, but they did not decide to fall back. They decided to go ahead and push on back up after the fallback. But we got a high right here of 1.6136, and on the pound dollar, we had an expectation of a move up to 1.6137. So literally within 1 pip. Okay, 1 pip away of a full deviation move, and you'd definitely be tightening at the 0.7, and then of course when it got a tick away, closed out, you'd be looking to possibly tighten up again, and you'd be able to capture a chunk of that profit. It did move down. It moved back down here to a low of 1.6093, and on the pound dollar, that would have taken you about a half deviation move back down, and you could actually, it would have been a full half deviation. It would have been a half deviation down, and then it basically has made almost a half deviation move back up. And so you had some great swing trades built in there that you could use as well. So this is great for swing trading these markets and trend trading the markets. Looking on over to the franc, we can see right here we got the USD franc. The USD franc moved to a low last night of 0.9275. And again, we do post these in the evening, so or actually I guess it's early this morning, but we do post them in the evening so you have access to them. And 0.9275, the USD franc. And there was an expectation of a deviation move down to 0.9275 to the tick. And you can see right there, 0.9275, 1 deviation move down. And, like I said, they're just incredibly accurate. These are great take profit zones. There's ways to trade them. There's a lot of different ways to trade them. I'm just showing you one of the many ways. You can go in and you can look at a out-of-the-money binary, and you can buy that and sell that and close it when it gets to that strike price and things like that. So there's a lot of different ways to trade them. But I'm right there. And then looking on over at the USD Canadian dollar, and it also had that big move down before it pulled back up. When it moved down to a low 0.9959, and we expected it to move to 0.9967, then on down to 0.9957, and so got about 2 ticks away from the next level right there, and you were able to hop in and at least on the first one and tighten your stop. And if you didn't tighten your stop on the second one, I mean, you definitely gets within a couple ticks. I'm tightening my stops up. But if you didn't tighten your stop, you still got a majority of the move, and you would have had a stop right here when it hit this level. And it came back up, and you got to capture that. And then on the move back up to the high side, we had the U.S. Canadian move on up to 1.0013. And that would have taken us up basically to a half deviation mark on the way back up. So you would have known to tighten your stops if you're going long the U.S. Canadian. And it's since retraced back since then. And we go on over now and check out the USD yen. On the USD yen, and dollar getting stronger a lot against the yen lately here. And checking this out, we got a move on up. Let's see here, to 79.95, so right there up to that deviation move before it pulled on back. And so again, you just definitely want to take advantage of statistical analysis in your trading. And our move on the USD yen, read that off for you there again, that was 79.95, and we had an expectation of a move up to 79.89 and then up to 80. So 5 ticks of a full deviation. It almost hit a full deviation, but definitely you would have tightened your stop at the 0.7, 79.89 when it broke that. And so really over here, you would have been tightening your stop up. Probably got kicked out of the trade right there, and then it just, basically oscillated back and forth sidewards, sitting at that 0.7 deviation level, and just like I said, 0.5 away from the high. So it would have worked out really well for you. Again, you need a way to know where to tighten your stops, and this is a way to do that. You need to know a place to go, hey, where is a potential reversal? And if you can line this up with your Fibonacci analysis, if you can line this up with your ABCD patterns, if you can go in there, I mean, there's so much you can do, and like the Gartley butterflies, putting all that together, and you get confluence, and that's the big word of the day, okay, confluence, and that's where several things line up at the same time. So you basically have like an indicator, maybe you have your support resistance level, you have a deviation level, you have a fib level, you have all these different things all lining up at the same price levels. That gives you a lot of confidence that that's going to be a area to take profit or an area to reverse on the trade, or maybe an area to get in on a trade, such as like on a reversal. Anyway, so that's one of the many ways that you can use them. That's how I use them when I trade, and they've kept me out of a lot of bad trades. They've helped me take in a lot of good trades. And so just to check those out, if you haven't already, again, you can get a 2-week free access. You can watch them yourself for the next 2 weeks at no cost over there. And now let's go ahead and check out, we're going to go into the fundamental analysis because we got some big old reports coming up. And we had a few reports come out, sort of some interesting stuff. We got the overnight. We had, let's see, I want to see if there's anything last night real quick that was of major. We had the building approvals in Australia. They came in much higher than expected. And so I can go ahead and pull that in and show you sort of the impact that report had. That was the one we called out last night as having, expecting that to have a decent impact. That was at 8:30. And so we're scrolling over here, and you can see right there that report did have a good impact on the Aussie dollar. The Aussie dollar did move, on up off that. It pulled back down, then moved on back up. And so you could have used your deviation levels in this process to help you know where you want to take profit when that report came in positive. And you could have straddled it with binaries or with spreads. So that way, because you don't know what's going to happen, you don't know how the news is going to come out. But when it comes in positive or negative, if you're straddling it, you can make money as long as it moves far enough in both directions. You just need to know how far you expect it to move to know if it's a good trade for you. And then rolling on over to the early morning session here and looking at several things. Let's see. One of the big things, the announcements came out of the euro, and I'll pull up the euro dollar. I was sort of shocked when this came out, the way everything reacted to it. But pulling up the euro dollar and going on over, the unemployment rate came out at 6 a.m. And I would have thought we would have had a drop off sooner, but it came out right here, and it just sort of oscillated, then it pulled on down. But the unemployment rate came in at 11.6%, so making another new high move on unemployment in the Eurozone. So pretty negative news right there coming out of the euro dollar. And so that when that news came out, it went ahead and decided to push it on back down. Stay there, folks. We'll be right back, and we'll wrap up the fundamental analysis for tomorrow.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. We're doing a wrap-up on the fundamentals coming up. And I'll wrap up today, and then we'll go right into tomorrow. There is some interesting information about one of the numbers coming out tomorrow I want to let you know about. The GDP came in negative for Canada, and so you can see right there. That did, once that number was released, it did have a weight on the Canadian dollar. And then on over to, if we go ahead, one of the things I also want to show people here is on the euro dollar. One of the reports came out, and you saw this big move up. Well, what caused that report? The German retail sales number came in much better than expected at 3 a.m. And so that when that number came out, it went ahead and launched it on up. But, of course, when their unemployment rate came out, that pushed it on back down. And looking on over, that's why you got to know about that fundamental analysis. Okay, so we talk about statistics, fundamentals, seasonals, technicals. So right here, this fundamental side of things of when do you expect things to happen is the fundamentals, and how far is the statistics. Looking on over to what we have tonight, China's going to have their manufacturing PMI number come in. That's going to be a big number. Okay, so you really should expect that to potentially have some movement on the market overnight, whether that's good or bad. That's going to come out at 9 p.m. And let me see here. I'll go ahead and post that up. It's a fungroup.com is where you can get access to the PMI numbers for China. And I'll also post that link over in the Tiger's Den for you. And then looking on over, what else do we have coming on tomorrow? We're going to have manufacturing PMI also come out of Britain at 5:30. Okay, so an important number right there. And that'll be on the market website. That's a great Market Economics, MERKIT economics.com. That's basically who puts together a lot of the PMI numbers. And so you want to get access to that as well. You'll probably want to have that one in your bookmarks. Again, marketeconomics.com. So that'll have an impact, of course, on the pound dollar, a little bit on the euro there. And then we got the ADP non-farm employment change. And they actually are changing the formula and how they calculate it, like right before the elections. So you're going to want to be aware of that they are changing the formula. That will have an impact on the number itself. And I'll go ahead and give you, if you go to adpemploymentreport.com, again, that's adpemploymentreport.com, then you can read the press release they put out about the details about how they're changing, they're partnering up with Moody's and how they're enhancing, as they call it, the ADP National Employment Report. So you're going to want to be aware of that just to know what kind of effect that can have on it. We'll talk a little bit more about that tomorrow. But that number is coming out tomorrow at 8:15 Eastern Time, and then 15 minutes later, the unemployment claims report is going to be coming out by the Department of Labor. And so you can look at that one over there on their website, the DOL.gov, and that'll have all the information on there for you. And then looking on over a little bit later in the day, we're going to have, CB Consumer Confidence. That's going to be coming out, and it's a pretty big number. And they actually shifted the time 2 days later. It was supposed to come out 2 days ago, but with the hurricane, they moved that, and that's the Consumer Confidence Board report. And they'll have that survey number come out. That's a pretty big number, where they survey a lot of different people, about 5,000 different households, and ask them about their outlook on economic conditions. And so that number comes in. The expectation on that's 72.4. They're actually expecting the unemployment the ADP number coming at 138,000 for the employment change, which means a lot lower than what it was last time. Last week we had 162,000, but again, they're revising how they calculate it. So I'll be checking that out over at adpemploymentreport.com so you can see that and what they're doing with it. So at 10 a.m. we have the CB Consumer Confidence, and this is Eastern Time at 10 a.m. We also have ISM Manufacturing PMI. And so you're going to want to make sure you're on top of the ISM number as well. That'll come out at the same time. And so if they're conflicting, it's not going to help you much. If they're both bad or both good, then the market could definitely move in one direction or the other. And so that's the fundamental reports that you're really going to be concerned about tomorrow during the trading day. And like I said, we'll talk about some of these changes they did in the numbers and how they keep changing how they're reporting numbers as things move forward. Everybody have a great day, safe day. Good luck in the markets out there, and I'll see you tomorrow.